Good morning, everyone. I'm Leandra Temmers, an investment analyst in the multi-manager team at Netgroup Investments. Today, we're joined by Mandi Dungwa, a portfolio manager at Camisa Asset Management. Now, we've recently become investors into the Camisa SA Equity Fund through our excess fund of fund range. Today, Mandi will be looking at the outlook for SA Equities going forward, and we look forward to her presentation, aptly titled, "The Ebbing Tide Will Turn." Over to you, Mandi.
In terms of what I'm going to be discussing today, we're talking about the ebbing tide. So an ebbing tide is a low tide season for us here in Cape Town. And really, when using that metaphor in terms of equity markets, what we are saying is there's quite a lot of over-pessimism priced into South African equities at the moment, and we believe it will turn. So that's just a graphic to show that the tide is low, and really quite a lot of negativism priced into the South African equity markets. So the tide has been ebbing for a while in South African asset prices. And really, what is the rationale, the reasons for that? We've seen global interest rates rise quite significantly over the last number of years. We believe they are peaking or have peaked. And because inflation has rapidly declined, which was the reason for the initiation of the rate hiking cycle. We've seen a relatively weak Chinese economy, and China has large linkages to South Africa, mainly through our commodity exporters, as well as through Naspers Process, which is one of the largest companies listed on the JSE, and its main holding is Tencent, an internet company in China. In terms of geopolitics, we've seen a lot of instability. We've seen the Ukraine crisis, as well as more recently, problems in the Middle East. And what that does, it leads to risk aversion in the market. So for a market like ours, that's seen as quite risky, we have seen some selling and retreating to places of safety. And a consequence of some of the instability we've seen in terms of geopolitics has been quite rapid inflation that has come through. If we think of Russia, it is quite a large commodity producer, and we've seen higher oil prices, and that feeds through into a number of inputs. In South Africa, post the pandemic, we've had quite deep scarring. So we still have scars from that pandemic, and that has resulted in higher unemployment, high inequality, and very high increases in government debt from that period. We've also seen massive state-owned company failure. Really, I think for everyone, we experience Eskom load shedding or have experienced it in the past. And that came on and really affects business ability to perform and generate revenues in South Africa if you don't have alternative power, which actually increases the cost of doing business. From businesses that are export or import, we've seen failures at Transnet, particularly rail and port infrastructure being able to deliver. So that affects, again, businesses able to operate in the country. We've got an extremely weak South African economy that is solely in need of policy reforms. We think we are starting to see some of the right actions being taken, but really that is the backdrop that we have. We also experienced temporary strength in our terms of trade, which is the ratio of export prices relative to import prices. So that's we had a temporary strength due to quite a significant increase in commodity prices post-COVID. We've seen that recede quite a lot, largely to some of the issues we've spoken about at Transnet in terms of their ability to move those export products out of the country, as well as commodity prices declining due to some of the issues in China. In terms of interest rates, we saw interest rates rapidly increase. This is the highest rate hiking cycle for quite a while. We believe it has peaked, and I think quite evidenced in this chart is showing that interest rates have peaked, and actually we're in a loosening cycle. And we believe this could be quite positive in terms of changing sentiment, as there is uncertainty of when that will happen. But the reason for this peak in interest rates has really been the rapid decline in inflation that we've seen more recently. The South African financial markets have been particularly weak in this context. So foreigners have been relentlessly selling South African assets. We've seen very low activity on the JSE. Investor sentiment is actually quite despondent and defensive in reaction to some of those issues. And there's this widespread continuation of trends. So there's no pricing in of inflection points or that this is a transitory weakness. So what's priced into equity markets is quite negative. Mid caps have substantially derated in this environment. We do have quite a concentrated market, and we do have large asset managers as well, all flocking to some of the larger listed companies. But we think this is a time of particularly inefficient market pricing. So really not pricing in the cash generating ability of these businesses. And we think this is a good opportunity for stock pickers. In terms of just showing some of those charts, so this just shows that foreigners have been relentless sellers of South African equities, and just displayed here over a number of years. In terms of small companies, so this graph just showing a valuation metric, price to book, relative to top 40 would represent the large companies relative to the small and mid caps. And over time, we've seen quite a massive derating or decline in prices of small cap companies. But actually, if you look at their performance, a return on equity is just looking at profitability has been quite resilient. So if we take out the blips that we saw in COVID, obviously that was not a sustainable long-term issue. We've seen a recovery through that, but we haven't seen a recovery in market prices. In terms of a low tide, going back to our metaphor, we do think these low tides present good opportunities for finding investment ideas. So in terms of that, foreigners can actually start selling, they can slow, and just a small change in that could be quite meaningful for asset prices. These trends can inflect and investor sentiment can turn. China, which is the second largest economy in the world, has put in mechanisms to improve its economic prospects, and that could rebound and could be quite meaningful for South African exporters. SA's chronic economic problems should ease. We have seen some reforms come in, increased public-private participation at Transnet, a new CEO, and easing of load shedding. We've got very low market prices at the moment. We think those should rebound when you get a little bit of good news, as this excessive crowded pessimism could recede. So thank you for joining me today in terms of looking at the outlook for SA equity markets. We do think this is an environment that could lead to outsized excess returns for those that are willing to be positioned quite differently. Thank you.
Thank you for those insights, Mandi. We're going to jump straight into Q&A. Now, our audience have heard from local fund managers for several years now on the attractiveness of SA equity, and, PE ratios are trading at well below historic mean. How do you at Camissa distinguish between stocks that are more likely to revert back to fair value as opposed to potentially becoming a value trap?
Thank you, Leandro, for the question, and thanks for having us. In terms of that, we would say we would look at things from a bottom-up valuation, looking at the fundamentals, cash flow generation of the particular businesses. So looking at it on a case-by-case basis instead of just in a grouping. So in my presentation, I referenced price-to-book valuations as well. So that would be a start to say, we think something is happening here. There are opportunities to be had, but you would need to look at that on a case-by-case basis, bottom-up fundamental research. And through that, and get accessing the actual intrinsic value of a business, I think we can stay clear of value trap, or at least that's what we try to do at Camissa Asset Management.
Great. Then you invest along the full spectrum of market cap, from large to mid and small. And recently in the headlines, we've seen, BHP trying to acquire Anglos. We've seen the likes of Vivendi's Canal Plus trying to increase their stake in MultiChoice. Now, how much, when you're looking at valuations for a small to mid-cap company, how much emphasis and weight do you place on corporate activity? And perhaps more broadly, do you look at that as a proxy for economic health or, local market value?
Yeah, In terms of corporate actions, I think we have seen that. I think it is somewhat of a proxy. So clearly somebody else is looking at our stocks listed on our equity markets and saying, actually, I see value more than what the share prices are referencing. So if you take the BHP example, for instance, Anglo has rebuffed them twice. So they've rejected both proposals put by BHP because it was quite an opportunistic sort of bid for Anglo. But really, I think, again, in this environment, it's not really focusing on corporate action because it is quite difficult in terms of the uncertainty of when it happens and the timing and how large it could potentially be. So we would, again, be focused more on valuations, long-term cash flow generation, ability of that particular business, instead of placing quite significant weight on quite uncertain corporate action. But when it does happen, again, it's another reflection just to show us that a lot of over-pessimism is priced into a South African equity market.
Yeah, of course. Mandi, I really want to try and squeeze in a third question, but I think we've run out of time, unfortunately. So thank you so much for joining us today and sharing your insights. And we look forward to having many more client engagements with you going forward.
Thank you, Leandra. Thank you to your audience. Thanks.